Welcome back to the black hole of real estate. We're ready to go with episode number 12. And today we're going to talk about foreclosure bans have been extended once again. The PPP rules, well, they've been eased as well. Self employed borrowers, you've got a couple new wrinkles if you're going to qualify for a mortgage. And at the end, the best beach towns are ranked by Wallet Hub. Some great information on that as well. I'm Ron Wysakarski, your host of the Black Hole of Real Estate. Now, foreclosure bans extended once again. Let's face it, the government's doing a couple of things right now to help us out, get through this financial crisis that might have happened during COVID. That's largely been averted, if you can believe that. Whether you have a political bias to one side or the other, really doesn't matter. Right now, they're getting a lot of things right in the financial markets. And for those of you that were, waiting and hoping for foreclosures to hit the market for you to have that opportunity to make more investments, it looks like that's probably not going to happen, and here's why. Again, the foreclosure ban has been extended, and what that means is banks are going to have to wait and work with the homeowners for some sort of a workout program a little bit longer, even a lot longer, to keep that foreclosure roll to a minimum, to a normal standard, if you will. So if you're in some sort of a forbearance, we're being asked to work through that. If you are somehow in a situation where you're avoiding payments, you might still get foreclosed on. This is not a blanket that you just can't make your payments and expect to live in the house forever. But if there is some hardship that extends beyond COVID, a health concern that's not COVID, some financial matter, the loss of a job for an unrelated measure, those things, there's more protections going in place to make sure that good people that want to pay their bills aren't put out on the street. Now, at the end of the day, if you don't pay, you don't stay. But that's not going to happen as quickly as some might have anticipated. And overall, it's probably not a bad thing. The market, if anything, right now is inventory starved across the nation. And adding in more REO properties really isn't the solution for housing that we're looking for. That just puts pressure on rent rates and asks for more housing to be developed, but it doesn't do much for the infrastructure of the homes that are currently there. So we'll see how that plays out. But right now, it does not look like foreclosures are going to be a thing in 2020. PPP rules. This is a big one here. The government has set out to get money into the hands of businesses to keep people employed, help families pay their bills by staying employed, and to keep the economy in some semblance of order during COVID times. And as we ease out of that, and Florida's probably running about 50% right now, as far as their steps, phase two, to get back into the financial markets and get businesses back up and running. So we're perhaps a little bit ahead of the game of some other states in the country. But that PPP extension's helped a lot of the people that received it. The money got out there really fast. There wasn't a lot of rules or guidelines in place, and a lot of people were flying blind. Small business owners that were fortunate enough to get that money were facing some extreme pressures to have some financials prepared for the forgiveness portion of the loan. And if they stepped out of the box or missed it, that gift of the PPP to keep them in business and help out the families of the people that work for them and with them, well, that was going to turn into a really big onerous loan, which, given the opportunity, a business owner might have just selected to let some people go or put them on furlough. Well, the PPP came in and kept everybody working. When that turns into a loan as opposed to something that might be forgived, that business owner had a decision to make. Do I want to take that $10, $20, $50, $100,000 and invest in my people as a gift from the government to keep all those people employed? That's one thing. But to sign up and say, I'm going to take this giant loan where I could have made cuts in my business in other places, that would have been, I think more people would have chosen to do that. I'm not saying one side is right or wrong, but what it did was it kept the economy and the businesses going, and it would have been a much harsher restart for any of those businesses. So what I think we see right now is there's more opportunity for more businesses to restart, because here's what happened. It was a 56-day timeline that you had to use 75% of the money received from PPP and have that in payroll. The other 25% could have been, any other areas, but 75% had to be on payroll. And, think of yourself in some sort of a real estate business where you've got administrators and you've got marketers. There wasn't a lot of properties for many real estate firms to administrate or market during COVID times, and showings were way down. So those people, those families might have been, collateral damage, and the business and brokerage could have removed those fees. And those people may have come back. They may have, there wasn't a lot of other places to go to, so they might have been on unemployment or, straining the tax rolls in some other way. So it was either more unemployment or keep people working through PPP and allow those businesses to restart faster as opposed to starting the hiring process all over again. And for families, well, they would also be impacted because now not only are you looking for employment, you're starting in a new setting. You will go from seniority to maybe the lowest person on the totem pole, so to speak. So what we have right now is 24 weeks to use that money within the PPP. So instead of 8 weeks, it's 24 weeks. And the threshold of 75% use to payroll could be 60%, which some places don't have a lot of payroll. They would never be able to meet that 75% threshold. More of that money could be put into, perhaps marketing or other areas to keep people working to grow those businesses and help them find, new clients and new sources of business and income to come in to support that business. So overall, if you had 56 days, let's face it, if you ran payroll twice a month, well, that's over 60 days. So inherently, you might not have been able to get the 75% in just because you didn't have enough days to get 60 days worth of payroll fit into 56 days. So overall, the extension of PPP, well, it doesn't feel like a real estate item. It's actually huge in the real estate industry because it allows those brokers and firms and investment companies and apartment complexes the chance to keep their staff on, not have to rehire and retrain, and for all the families involved, they're able to have some stability as well. So overall, it's a huge move for the economy. And let's face it, the economy is doing well, the housing market will do well, and it's reciprocal. If the housing market is not doing well, all the jobs that are created for every new sale and every new housing start, well, those go away too. So PPP and housing, it's been a great match. And again, the powers that be, they're doing a good job of keeping that in place. Without that in place, it could have ran to 2008. It was different this time, and that's been great. So those business owners that are self-employed that might have benefited through the PPP and didn't have their house foreclosed on, so to speak, some of those people were looking to buy properties this year. A lot of people are self-employed, look to invest in real estate every year. So if you're a self-employed borrower, here's what's changed. If you haven't filed your tax return for 2019, and let's face it, a lot of the deadline, I believe, is July 15th, and you can do an extension all the way for your corporate till September 15th, and then your personal till October 15th. So a lot of times they'll use P&Ls in the absence of the returns. What you are facing as a self-employed borrower is you'll run let's say you have your 2018 taxes done, and your 2019 is just not ready. Maybe you couldn't get to your CPA, maybe you didn't have your numbers, COVID got in the way, any of those things. July 15th, you can have those filed, and that would be done. But there are extensions in place. For whatever reason, you can't get to them or your CPA can't. So here's what happens. You're going to have your 2018 tax return. For 2019, in place of it, you're going to have all of your P&Ls for all of your businesses and a personal report and W-2s and anything else, K-1s, anything else that you might have. In addition, and this is Fannie Mae, Freddie Mac, the new layer is 3 months bank statements to support those P&Ls, because 2019 is opposed to a return. It could be a draft, it could be a P&L. You've also got 2020, which they're going to want to take a look at too, because there could be a difference from 2019. So where it used to be a 2018 tax return and a 2019 P&L, well, now they also need they're going to need the 2020 P&L because we're halfway through the year. They want to see, were your numbers in 2018, were they similar in 2019? Yeah, probably. Maybe they went up. It was a good year. 2020, those numbers might be sideways, off, or just the same. Some businesses actually grew in 2020. They're going to want that P&L as well. Now, the supportive document that they weren't asking before was the bank statements. They might ask for one, but now they're looking for 3 months anyways of your bank statements to look at cash flow for all of your businesses. So if you own one business, 3 months bank statements for just that one business, in addition to everything else. If you own multiple businesses, they're going to look at all the revenue streams of all of your businesses to make sure that the cash flow that's running through your business in 2020, the last 90 days, supports the P&L for 2019 and also supports the P&L for 2020. So if you are a self-employed borrower and your taxes are already done and they're over to your CPA and they're filed with the government, you're all set. If, like a lot of people, you simply didn't get them done yet and you're looking at financing, Um, you've got two options: get them done, turn those into the government, or you've got a lot of extra paperwork now to turn into a lender to get that loan that normally would have gone through pretty easily. It's going to be a little more challenging. And it doesn't mean that you can't do it. What it does mean is that more than ever, cash flow of a business is going to enter into the financial equation when looking for mortgages. And I expect that to continue. I think once they put a layer in like that, I don't think it's going away in 2020. It'll probably be something you'll see for the next year or so. So if you're a business owner, run a good business, and your books are done, easy street. You apply for your mortgage, you get it no problem. If you run a good business and you just couldn't get to your books, okay, you'll probably be able to go through P&Ls and bank statements, and you'll be fine. If your business is on the marginal side, there's going to be a lot more scrutiny. And for that group, that may be a little more difficult to purchase a property as a self-employed borrower to the balance of 2020. So on the lighter side, Wallet Hub ranked 145 U.S. cities. Now, their criteria was a little bit different. They ranked it by affordability, weather, safety, and the economy. And that final list included 22 cities in Florida, 4 were in the top 10, and 9 cities in Florida were in the top 25. Now, what's interesting is the one thing the analysis didn't look at was the quality of the city's beaches. So to me, I got to put an asterisk on this because best beach town. Beach is life and luxury, and that state of mind, that's, that being by the beach thing, that beachy effect and that tranquility. I don't know that everybody makes a business decision on where they're going to buy their beach house or their beach property. And while affordability, weather, safety, and economy are certainly a piece of the puzzle, if you're buying a beach house and the beach is lousy, none of that other stuff matters. So if we look at the report right now, at least according to this, Naples came in at number 1 on overall score. And again, all they didn't look at beach quality. And the beaches there can be wonderful, and that's okay. But they were focused on other things: affordability, weather, safety, and the economy. So if you're looking at it from just that narrow vein, Naples, Boca, Sarasota, Vero, Destin, Fernandina Beach, Venice, Jupiter, Satellite Beach, those were all in the top 25. Some of the other ones which have great beaches, Cocoa Beach came in at 53 nationwide. I got to think Cocoa Beach should have come a little higher. Ormond Beach came in at 56, and that's actually very close to where we're produced from. And that came in, just under the top 50. Great beaches up over there. So I think if you were to actually factor in the quality of the beaches themselves, I think you would turn some of these numbers on the reports upside down. Because New Smyrna Beach, great beaches, came in at number 71. Now, nationwide, that's a great place to be. But I can tell you, New Smyrna Beach, I think that ranks a lot higher, as does Ormond Beach. Daytona Beach, it's highly affordable. It came in at 125. That's an interesting one. Panama City Beach, 132. So I can go down the list over here, but here's what's important is to notice that a lot of property, 22 out of 145, that's a big number. 1 in 7 made the list. I just got to ask you, if you were buying a beach house, wouldn't the quality of the beach be important? So I know Wallet Hub is a financial service, and I think it's a great report, and it gives some insight to it. And I would use this list after I picked out the best beach for the beach house, because then it would help you out with the decision. So I'll be watching for another beach house report where it just or beach towns where it just talks about the quality of the beach. And maybe if we found the top 5 or 10 beaches, then we can look at this report and make a great financial decision. But I think buying a beach house, isn't that an emotional decision? How many people really sit down? Well, financially speaking, this is the business. With this business report, this is where I'm going to buy my beach house. No, I think that most people, if they're buying a beach house, they're looking for that great beach vibe, that great beach where they can walk out on the sand and enjoy it. Nobody's going to enjoy the beach house if it was a great financial decision, but the beach, well, sucked. So that's what I got for you this week. Find the best beach house that you can, and check us out next week for another episode of the Black Hole of Real Estate.